In this grade 12 economics video, we are looking at the paper 1 of the May-June examination of 2024. In it, we are going to come across the circular flow as well as the tax part of the circular flow, and we are also going to look at national accounts, particularly the GDP, and we are also going to look at the multiplier questions from this same question paper. The question paper will be linked in the description box below, so make sure that you download it. On this video, we are basically focusing on question 2 of that question paper. There will be more videos where we focus on even more question from that same question paper, so make sure that you download that question paper in the description box below. When you click on it, it will download straight into your device. So let's look at our question paper. Our question paper in question 2, the main topic is macroeconomics. We know that under macroeconomics you have the circular flow, the business cycle, you have public sector as well as international trade, and that's why those topics that you are going to see in this question, they cover more or less of those topics. In 2.1, we are having a tax question as well as an investment question. Basically, these are the things that you find under the circular flow topic. Taxes, you find it when we are dealing with the exchange between households and businesses with the government. They pay tax to the government and so forth. And then we also have investment spending, which is what businesses do. And then in 2.2, we have a case study, and you answer question based on it. Our case study is mainly focused on the injections in the circular flow. And then in 2.3, this is where now we are looking at national account aggregate. By national account aggregate, basically we are talking about your GDP. So it's a question on GDP that you will see. It starts off with a table of revenues, expenditure and budget, as well as how basically the GDP of the country was calculated between the 2023 and 2024, as well as the 2024/2025 financial period. So it's adapted from the national treasury, and the questions that will come after it, you can expect them to be questions based on this case study as well as GDP as a whole. So you are seeing that they want things like abbreviation of the MTEF. They're also looking at medium term policy statements, and then they are looking at the percentage of GDP. But when we move on to 2.4, you will see that now we are going back to a different question, or a different topic rather, where they're asking about the characteristics of public goods. When we're talking about public goods, it can fall under circular flow because it's part of the state, but it can also fall in the public sector part. And then lastly, we are looking at the multiplier question. So let's start with at the beginning of our question paper, where it mostly focuses on the circular flow and taxes. So our 2.1 says answer the following questions. In 2.1.1, they say name any 2 examples of indirect taxes in South Africa. So indirect taxes, we are talking about the type of tax where it's already included in your price. Basically, you don't get to pay it separately, unlike things like income tax. You see your income and then you see the amount that you have to pay separately for your taxes. But indirect tax is things like VAT. You find that in a price, VAT is already included. So when they say something is 10 rands 99, in that 10 rands 99 they have already included it, and that's why it becomes indirect tax. So under that category, we have value added tax, the excess duty, which is sin tax, the fuel levy, as well as the custom duty. So those 4 are our indirect taxes. The question only wanted you to give 2, so you can give any 2 of those. But if you were not familiar with your indirect taxes, I urge that you write this in your notes, so that when they start asking you about indirect taxes, you know that you can choose from any one of those 4. You have to understand that in the circular flow diagram itself, they don't discuss much about taxes, other than it's what businesses and households pay to the government. But there is a lot more that is encompassed in your taxes. So make sure that as you're taking your notes, if you want to separate yourself from just a pass to a distinction, you need to make sure that you understand taxes as a whole, how the government works them out how do they charge to the household and how do they charge to businesses, and basically how each and every single one of your taxes work. Because you will see even in this question we have a lot of questions that just deal specifically with taxes. So it goes to show that you can't just say I know my circular flow because you know your circular flow diagram. We have already done a video on circular flow, and in that video you will see that we mainly focus on the circular flow diagram and its participants, but we never went into detail over things that fall under that. That is your responsibility to still do those. So you can go back to your circular flow notes and even add some of this information. In 2.1.2 it says, how could a decrease in investment spending lead to recession? Now this is one of those things that I'm just saying. In the circular flow diagram you are told that businesses invest, right? Businesses make investment. So when we are talking about a decrease in spending, we are talking about if the businesses decrease their spending because they are the ones that are known to invest. They make big invests that affect the economy as a whole. So my answer there, I said if businesses decrease investment, that will reduce the production in the economy, because that means the business will not be getting a return as it is expected. That will then result in a decrease in GDP, which will force the economy into a recession. Remember, in the business cycle, a recession is basically when the economy is dipping down. So now we are talking about that. It's actually a good thing, because in the business cycle you know that we are talking about businesses. So when you think of investment and you think of a business, businesses invest. That's what they do, and that's what helps the production in the economy. They invest into the employees that they hire. They invest into the products that they sell. If they stop doing that, then that means people will not be hired. It also means there will not be any goods to sell in the marketplaces, and that's what will lead us to a recession. Then we are in 2.2. 2.2 says, read the extract and answer the questions that follow. Economy needs a cash injection to recover. That is our heading. It says the economy needs a cash injection, more disposable income for households, or an increased social wage through grants and service provision. By injections, this is another thing that you find again in the circular flow. Injections are those things that we inject into the economy to help the economy pick up. So cash injections, basically we are saying that the economy needs more cash that is circulating in the economy. The cash needs to circulate. If the cash is not circulating, then it means that we are going to face some problems. So look at 2.2.1 says, identify one cash injections in the extract above. Our extract says they needed more cash injections, and then they said more disposable income or an increase in social wage and through grants and service provision. So your cash injections are disposable income, social wage, and grants. Those things, they help money circulate in the economy, because if money is not circulating, for example grants, if people didn't get their grants and they were unemployed, it means those unemployed people who are not getting grants, it means they're not buying anything, which means they are not injecting anything in the economy. So what that leaves us with is an economy that has people that cannot invest into it, and that will be a problem. In 2.2.2 it says to identify the participants in the circular flow who are responsible for supplying factors of production. Meaning, when businesses are looking for factors of production, who do they go to? So this takes you back to your memory of the circular flow diagram. We know that businesses use the factors of production, but where do they get them from? They get them from households. It's households who go to businesses to sell their factors of production. Their factors of production is things like labor. They sell their labor to businesses. A business hires you so that it can produce, and you work for that business as a laborer. Then in 2.2.3 it says, briefly describe the term autonomous consumption. So this is a type of consumption when we know that our households in the circular flow diagrams, they are the ones who are responsible for consumptions. They are the ones who are consuming. So there are different types of consumptions. One of them is called an autonomous consumption. So what is an autonomous consumption? The autonomous consumption refers to the expense the consumer must pay for regardless of their income. So this is one of those spendings where a consumer doesn't care how much they have, they will find a way to spend it. For example, when you're buying a house, you don't buy a house just based on I'm earning 2,000 a month. You will take a loan, and then the loan will give you money, and then you will pay the loan for 30 years so that you can be able to spend and live in that house, because a house is a necessity for you. So it goes beyond how much I'm making. Whereas there are other things where if I'm not making that kind of money, then there's no point for me buying that thing if I can't afford it. Then in 2.2.4, it says, why are cash injections important to a South African economy? I think we mentioned this at some point, that when people are not spending cash into the economy, meaning that us as customers, we are not going to shops to buy, that means those shops are not making a profit. And if shops are not making a profit, then that means that they are not paying taxes. That means our government is suffering, meaning they can't provide public goods, which is just a round and round cycle, butterfly effect of an economy going down. So it says an inflow of cash into the economy will increase national income and stimulate economic growth. So national income can't increase if there's no cash injection in the economy, because if I'm not buying, for example, at Pick and Pay, that means there's an employee at Pick and Pay who can't be paid, and if they're not paid, it means they're not paying taxes, and Pick and Pay is also not paying their own taxes, so that person can't also get grants either. So you see, it's a cycle of national income being affected. In 2.2.4, it says, why are cash injections 2.2.5, how does an increase in the marginal rate of taxes influence the value of the multiplier? Marginal rate, we are talking about an increase in 1 unit, meaning like increase, VAT used to be 14% and now we make it 15%. That's a marginal increase. It's increasing by 1 unit. So an increase in the marginal rate of taxation will lower the effect of the multiplier. As taxes reduce disposable income, in turn reduces the consumption and spending in the economy. So what that means basically is, if I'm earning 2,000 rands, and out of my 2,000 rands, they were taxing me at 14%, and that 14% resulted to like 500, right? And they increase that tax to now be 16%. That means now my tax is somewhere like 800. So that means that there is a 300 that I'm no longer spending in the markets because SARS took it. So it's decreasing my disposable income. I don't have enough income to dispose. Disposable income basically means the income that I can use to buy things. So now that income is not there anymore, or it's been reduced because the tax rate has increased. That's what we mean by a marginal rate of taxation, the increase in a marginal rate of taxation. So it has increased, and because it has increased, it means my income that I can dispose is lower, and if it's lower, I'm spending less. Then let's look at 2.3 now, which deals with the multiplier as well as GDP. In 2.3, it says that study the table below and answer the questions that follow. We are seeing a national account aggregate question. This one is specifically about the gross domestic product. They tell us those values there, they represent something called the MTEF, right? And we are seeing value for the previous 2 year, or the current year and the previous year. So what we are looking at, we have revenue, we have expenditure, we have the budget, and all of that have been calculated into a percentage of the GDP, and then at the bottom we were given our GDP. So basically we are saying that the revenue that the country made is the revenue that you're seeing there, and then we have to represent that revenue as a percentage of the GDP, but we will get to it when they start asking that question. But the first thing they want us to explain is, in 2.3.1, what does the abbreviation MTEF stand for? That MTEF basically is that column. You saw it as our heading in that table. So they want to know that MTEF, basically those amounts that you were seeing were the amounts that were representing what we call the MTEF, which means it's the medium term expenditure framework. So basically that thing you're seeing there is a budget. It's a budget of expenditure, or a framework of expenditure that you are seeing there. And we want to know for how long does it go, because we have different budgets. You can make a budget for a month, you can make a budget for a year. That one is for a medium term. Hence, it is called the medium term expenditure framework. Then the next question in 2.3.2, which government department is responsible for preparing the MTF? The MTEF basically is a budget. The budget is about money. So whenever you are thinking about the budget or finances of a country, we have different departments of everything. Just like we have a department of transport, a department of education, money will be handled in the department of finance. It's as simple as that. You can simply say Department of Finance, and that would be your final answer for where the MTEF is handled. It's the same department that will handle any other term, meaning a long term or a short term, all of them. So long as it's finances, they will be handled in the finance department. In 2.3.3, it says briefly describe the term medium term budget policy statement. So basically here we are talking about a medium term budget policy statement. So it's a type of statement, it's for medium term, and it is about our budget. If you can explain budget, then you are good. Your only worry there is to know how long is a medium term. So we said it's a statement that shows 3-year projection of expenditure and revenue for national and provincial government. So medium term, basically we are saying medium term is 3 years. So if it's 3 years and it's a projection, because budget is a projection, there are things that haven't happened yet. We are hoping that that's how we will spend and that's how we will receive revenue. In 2.3.4, it says use the information in the table above to explain whether South Africa has maintained its budget deficit as a percentage of GDP according to the international benchmarking in 2023/2024. According to the international benchmarking, that is a thing that you need to be able to Google for yourself, or as an economic student you are supposed to be in touch with your budget speeches and so forth. So if you know, according to our budget speech, the international deficit benchmark is 3%. So basically what this question is saying to you is we also have a deficit as South Africa. But is our deficit according to the standards of other countries, or is our deficit too much? So it says South Africa has exceeded the international benchmark 3% deficit, because meaning if it's the international, it means most countries, when they say they're doing bad, they have a 3% deficit. But South Africa budget is estimated to be 4.8. Where do I get the 4.8? Look at the GDP percentage under balance. It says minus 4.8. So that puts South Africa above, meaning that there are countries that are doing bad and they have a deficit, but South Africa is performing under that deficit. The goal is always to be above the deficit. Then in 2.3.5, it says calculate the value of A, which is the expenditure as a percentage of GDP for 2023/2024. So you are seeing it there, the percentage of GDP. So to calculate a percentage of GDP, basically you will take the expenditure, which is 2,176.8, and you are going to divide it by the gross domestic product of that year. That is the 6,805.3, and then you will divide your final answer by 100, and it should give you your percentage. So you see the expenditure as a percentage of GDP, it's expenditure divided by GDP multiplied by 100. So our expenditure, we see there is 2,176.8 divided by our gross domestic product of 6,805.3, and you multiply the whole thing by 100 for it to be converted to a percentage, and that's going to give you 31.99%. Even if you round it to 32%, you would still be correct. If your calculator can do fractions, if your calculator can be a fraction, you just press the fraction button, you put expenditure on top, GDP at the bottom, and then on the side you multiply by 100. It should give you the same answer. Then we move on to 2.4. In 2.4, it says briefly explain the non-rivalry and the non-excludability as characteristics of public goods. When we are talking about public goods, we are talking about goods that are provided by the government. So anything that comes from the government. As characteristics, public goods are known to be non-rivalry, meaning people don't have to fight for them because they go to everyone. They're also called non-excludability. They don't exclude people. So they just want you to explain what do they mean by non-rivalry and non-excludability. So in non-rivalry, we said non-rivalry means that the consumption of goods by one person does not reduce the amount available for the other. So if they say SASSA grant is 350, it's 350 for everyone who qualifies. So just because they gave you 350 does not mean that I'm going to get something less than 350 even though I qualify. They don't say the ones who came first will get 350s and the ones who come next will get 250s. It's a public good. The amount available does not reduce. If they said they're going to give everyone 350, they give everybody 350. There is no competition among people when using these goods. They're not things that we compete for. You can't brag to a person who's getting 350 that you have gotten a 350 because they will also get their own 350. So they don't pose a competition. Now our question is out of 8 and everything is 2 marks each. So you are welcome to stop there in your explanation of non-rivalry, because 2 points each. 2 points for 2 marks, that's 4 marks for non-rivalry, and you can do 2 points as well for non-excludability so that you can get your full 8 marks. But I have provided you with all 4 possibilities. I will stop there, but if you want these ones, you can write them all in your notes. You can pause here and write everything in your notes, and I advise that you write what would be simpler for you to remember. So let's move on to non-excludability. Non-excludability implies that no one can exclude from using the good. It is open for consumption by everyone. So if they say it's a public clinic, for example, in a public clinic, anyone can go. You can't say you can't enter here because you look like this way. It's a public clinic. It's for everyone to go. Like similarly, if it's a public park, if it's a park by the government, your local municipality has put a playground there, you can't now exclude people from going there because it is for everyone. It is for that community, right? And then the second bullet says, once goods are provided to the public, it is difficult to practically exclude individuals from benefiting from a good, even if they do not pay for it. So for example, if they had said that we are building roads in your street, the government built a road, a tar road in your street, you can't now say that people who don't live in your street cannot drive down that road. It is hard for you to exclude them. The road is there. People are going to use it, whether they are your neighbors or not, whether they are even from your community or not. It could be a visitor who's passing through, and they can pass by your gate on the road that is on your gate because the government has put it there for anyone who wants to use it to use it. So I'm going to stop at the second bullet because that's all you need. But again, I still advise that you pause the video, you write all of these reasons down, and try to summarize them in the English that you will remember for yourself. Then our last question in question 2 is 2.5. It says, analyze the effect of a change in the marginal propensity to import on value of the multiplier and South African economy. So here we are looking at the question of a multiplier. So we are looking at the effect of the marginal propensity to import. So meaning the ability to import. So meaning when we say marginal, if our imports increase by 1 unit, what does that mean for us? Or if they decrease by 1 unit, because it just says the effect of a change. They didn't say if it's a decrease or an increase. So that's what you are going to have to answer for both, meaning you must at least give 2 points for an increase and 2 points for a decrease, because the question just said a change. We don't know if it's an increase or a decrease, so you have to discuss both. So let's start with an increase. What if our imports increase? It says when a marginal propensity to import increases, it means that a larger portion of income is spent on importing goods and services from other countries than buying domestic goods. So meaning that the number of goods that we are importing from other countries to our countries have now increased. What does that mean? Remember, in import, you're basically buying from a shop that is in another country. So that means that you have left your local shop and you are supporting a shop in another country. For that country, that is going to be good because your money is going to circulate in the economy of that country. Your country's economy here will not have anything in circulation. So whatever amount that you would have spent will not be circulating in our country. It will be circulating in that country. So that's what we mean, that it will increase the portion of income that is spent outside, meaning you're taking the cash injection out of our economy. The second bullet, it says the multiplier will decrease because of the reduced amount of money in the circulation in the domestic economy. Remember the whole point of a multiplier. If you're not aware or familiar with what the multiplier is, to explain this simpler, I'm going to use a 10 rands note, right? Let's say I have a 10 rands note in my purse, meaning if it's in my purse, it's not in the economy. It's in my purse and I'm not using it. So it's not in the circular flow. But one day I decide I want bananas and I'm going to use this 10 rands to buy bananas. Then I give it to a person who's selling me bananas, right? That person, if it happens that 10 rands was the exact amount they were short of so that they can expand their business from just selling bananas to now selling bananas and apples. So basically the effect of my 10 rands is that it helped somebody expand their business. Mind you, it was not just the 10 rands. Maybe it was adding to something, but it had an effect. So what we are chasing after is that little impact that it has. That impact is what we call the multiplier. It moved from just being a 10 rands to now being a 10 rand that helps somebody expand their business, meaning that from a 10 rand somebody was able to expand. And if that somebody expands, it means they have more money to circulate in the business, in the economy, out of their business. So you get what I'm saying? So the effect of that 10 rands has now multiplied into something bigger than what a 10 rands represents. So that's what we mean by that. So if I'm taking now that 10 rands and I export it to Zimbabwe, that means in my economy, the 10 rands is multiplying, but it's not multiplying in our economy. It's multiplying in the economy of Zimbabwe. So what that happens is the domestic economy, meaning my home country's economy, which is South Africa, is going to suffer the effect of not having that 10 rands in its economy with whatever little difference that it would have made. That difference, we cannot experience it anymore because I have imported it. So now, if the marginal propensity to import decreases, so a lower marginal propensity to import means a larger portion of additional income will be spent locally. So that now that becomes the opposite of what just happened. So basically in this bullet point, I've now spent that 10 rands in South Africa, in my own country. So what that does is that it makes additional income to whomever I'd be buying from. So that business that I have given my 10 rands have now increased their income with at least 10 rands. Do you see what I mean? So this results in a higher value of a multiplier. Money circulates within the economy. So the money is circulating in my economy. The second bullet point we would add there is businesses will experience an increase in demand for their goods and services, leading to higher output, job creation, and the economy. So this is basically me saying, instead of buying bananas from Zimbabwe, I will buy bananas in South Africa, which forces the person who sells bananas to stock more bananas. And if they're stocking more bananas, hopefully their business grows to a point where they now employ people, they pay taxes, and all of that leads to our economic growth. So this is where our question ends. If you have any questions, leave them for me in the description box below. Now, if you need one-on-one help with anything that we have covered in this video or this subject in general, we have a visual program that can help you with just that. From anywhere in the country, all you need is an email and a WhatsApp, and we are able to give you personalized help for a monthly fee. This will cover full lesson recordings as well as notes and study materials for any of your subjects that you need personal help with. This will include some of the subjects that are not even covered on this channel. For example, subjects like history. You will soon see our full subject list. We will also cover scopes for those specific subjects as well as attempt past papers together. But what's most important about these virtual sessions is that you get full-time communication, meaning from the hours of 8 o'clock to 4 p.m. you are able to send in your questions. Even if you send them at late, between the hours of 8 and 4 you will get replies to your questions. You will get to go back and forth and get full-time attention on any question that you do have. Even if we have to repeat something over and over again, you get to have that personalized help that is helpful to you. As you can see with some of the examples there, we get to exchange scripts, we get to exchange question papers, and you get to show me what it is that you wrote, and you even get markings for your questions to see how you actually do perform when it comes to a specific question or a specific subject. Grade 10 to grade 12, as well as those who are upgrading and rewriting, those are the full list of subjects that we do offer. If you are interested in any of this, for you to be able to get your price quotation, it is very simple. All you have to do is email me on that email address that you see there. When you do email, make sure that in the subject line you write your name and surname, and then in the body of your email, that's where you will tell me your grade and the subjects that you need help with. It can be one subject or it can be a mixture of subject. Hence, we are saying that you need to email for you to be able to get your price quotation. Now, because this is one-on-one, it means that it puts a limit on the number of people I can take per month. So I'm going to be limiting it to 10 students per month. So make sure that you email to secure your spot. Have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel. And if you have any questions, leave them in the comment section below.